Before you start another busy year, pause. A little planning now saves time later. This is your 2026 strategy session. It will turn goals into an actionable plan. Clarity leads to consistent daily choices. Consistency leads to sustainable growth over time. A plan helps your team move together. Use this essay as a practical planner. A clear plan makes decisions easier. You pick tasks that match your goals. You waste less time and energy. You reduce stress in busy months. Money moves with intention and purpose. Your team knows what to prioritize next. Download the free 2026 Strategy Planner Workbook. It includes templates for budgeting, forecasting, and strategic goal tracking. Start with facts from 2025. Start with facts from 2025. Get revenue, profit, and top costs. List your top 5 clients or customers. Note major wins and major losses. Write one sentence about each item. Example: we made $120,000 this year. Example: ads spent did not convert. Those lines become your baseline lessons. Ask 3 straightforward questions now. What worked well last year? What wasted time or money? What should stay the same? Be honest, not harsh, with answers. Write short notes under each question. 3 insights can point your 2026 goals. Keep them clear, specific, and usable. Turn insights into benchmarks. If revenue grew 10%, note it. If client churn spiked, mark risk. Imagine your business as a story. What chapter do you want in 2026? Do you want growth or system fixing? Choose a clear, short vision sentence. Pick 3 strategic focus pillars next. Try revenue growth, efficiency, impact. Give each pillar one measurable goal. Make goals concrete and time-bound. Turn each pillar into a theme. A theme is an action direction. Example: expand. Example: automate. Example: enter market. Attach one big action to each theme. For automate, pick a specific tool. State a deadline, like by March. That makes the theme operational and urgent. Themes connect vision to daily tasks. Write measurable outcomes for each pillar. Revenue growth. Grow revenue by 25%. Efficiency. Cut admin time by 30%. Impact. Raise satisfaction to 90%. Use numbers to track progress monthly. Keep metrics few and clear, 3 max per pillar. Numbers make accountability simple and fair. They also aid forecast accuracy and budgeting. Start the budget with revenue goals. Set a yearly revenue number first, then split it into quarters and months. This gives a clear monthly target to hit. List fixed and variable costs next. Fixed rent, fixed subscriptions, fixed salaries, fixed insurances, variable ads, variable materials, variable freelance help, growth costs, marketing campaigns, growth costs, hires. Add a contingency fund line item. Aim for 5% of revenue to start. This helps cover months that surprise you. Also, add a reinvestment percentage. Decide how much profit to reinvest. Example: reinvest 20% into product. Make the reinvestment a monthly transfer. This treats growth like a regular expense. Example: small budget snippet you can copy. Revenue goal: $240,000 for 2026. Quarter 1, $50,000. Quarter 2, $60,000. Fixed costs: $3,000 per month standard. Growth budget: $20,000 annually for marketing. Contingency: 5% of revenue held in reserve. Reinvestment: 20% of net profit earmarked. Align each cost back to the pillars. If efficiency is pillar, fund tools. Fund training: budgeting ties money to strategy directly. Section 5. Forecasting 3 scenarios method. A forecast plans for uncertainties. Build 3 scenarios in your forecast: conservative, realistic, stretch. Show 3 overlapping lines on a graph labeled conservative, realistic, stretch. Each scenario uses clear assumptions. Conservative assumes flat or lower sales. Realistic uses modest month-over-month growth. Stretch assumes stronger growth and conversion. Lay out monthly revenue and costs for each scenario. Keep assumptions short and simple. Example: conservative, 0% monthly growth. Example: realistic, 2% month-over-month growth. Example: stretch, 5% month-over-month growth. Also set cost behavior in each scenario. Variable costs rise with revenue. Fixed costs remain steady. Net profit then shows across months. Update the forecast monthly with actuals. Compare forecast to actuals regularly. Note variances and write short reasons. Ask, why did we miss or exceed goals? Adjust the rest of the year's forecast accordingly. This keeps the plan responsive and realistic. It prevents mid-year surprises from derailing you. Use simple charts. Forecast versus actuals monthly. A 3-scenario forecast helps decision-making. Section 6. Growth Plan. 3 levers and milestones. Money without action stays a wish. Choose your top 3 growth levers now: acquisition, retention, pricing, partnerships, product expansion. For each lever, set quarterly milestones. Make milestones specific and time-bound. Q1, build lead magnet and list. Q3, launch referral program. Assign responsibility for every milestone. Name 1 person and list 1 tool. Solo owners, name a lead. This creates clarity and accountability fast. Add 2 to 5 KPIs to measure progress. Monthly revenue, new customers, average sale value, retention rate. Keep KPIs short. Avoid metric overload. Create small weekly tasks for each lever. If acquisition, 1 outreach per day. If retention, 2 client calls weekly. Small actions compound into big results. Track task completion weekly. Celebrate small wins to keep momentum high. Adjust tasks based on what moves metrics. Simple examples from other small businesses. Bakery, added a subscription box. Designer, raised prices and added discovery calls. Coach, launched a short group program for referrals. Learn from these simple, repeatable moves. Pick moves that match your capacity and brand. Test quickly, measure results, and double down. This cycle turns experiments into steady growth. Every plan meets surprises and risks, you know. Identify 3 big risks for 2026 first. Economic slowdown, cost spikes, staff loss. Write short practical responses for each risk. Plan B, short-term adjustments to survive. Plan C, deeper shifts if problems persist. Keep both plans compact and actionable. Focus on decisions you can make quickly. Example for lower demand. Plan B, pause non-essential spend. Plan B, boost low-cost marketing. Plan C, introduce a lower-priced offering to retain buyers. For staff loss, Plan B, cross-train team immediately. Plan C, hire a contractor for 3 months. Make sure actions preserve cash flow. Test these plans with simple role plays now. This rehearsal reduces panic under pressure. Build a financial buffer as part of planning. Aim for 1 to 3 months of fixed costs. Keep contingency funds accessible but separate. Consider a line of credit for emergencies. Practice a quick 3-step response drill. Cut growth spend. Renegotiate vendors. Pivot offer. Write the steps down and share them with the team. A rehearsed plan speeds your response time. Run a simple scenario test quarterly. Ask, what if revenue drops 30% for 2 months? Write 3 actions you would take now. Assign who makes each decision and when. This exercise becomes part of your monthly review. It keeps risk management active and calm. Resilience is built before trouble arrives. Small preparations prevent big failures. A plan must live in daily work. Create recurring systems to keep it real. Schedule a monthly CEO day first. Use that day to review numbers and decisions. Ask, are we on track and why? Decide the top 3 priorities for next month. Block time for those priorities on your calendar. Treat the calendar blocks like paid invoices. Use simple dashboards and tools for clarity. Accounting software. One-page dashboard. Keep 3 numbers visible each week. Examples: monthly revenue, new customers, cash runway. Make dashboards visual with simple charts. Share a one-page update with your team weekly. Short regular reports beat long, rare ones. Visibility keeps accountability and focus alive. Create routines that embed strategy into tasks. Daily, do 1 revenue-generating action. Weekly, hold a short team check-in. Monthly, update forecast and review budget. Quarterly, reassess strategy and milestones. Assign owners for each cadence item. Keep meeting agendas short and outcome-focused. Routines reduce friction and decision fatigue. They make the strategy automatic over time. Use small tech to save big time. Automate invoicing. Automate appointment scheduling. Use a CRM to track leads and follow-ups. Set reminders for monthly CEO days and reviews. But avoid over-automation that adds complexity. Pick a few reliable tools and stick with them. Simplicity wins for small businesses every time. Systems turn strategy into regular practice. Now gather the pieces together. Keep it simple. Reflect on 2025 to build your baseline. Define a 2026 vision. Define 3 pillars. Build a budget aligned to those pillars. Make a 3-scenario forecast for flexibility. Choose 3 growth levers with milestones. Plan for risks. Plan B ready. Plan for risks. Plan C ready. Create systems that keep your plan alive. Keep actions short and measurable every month. Do 1 CEO day. Do 1 monthly review. Update forecast and budget with actuals often. Make decisions based on data and themes. Share the plan with your team. Share the plan with advisors. Assign owners. Assign tools for clarity and speed. Celebrate small wins and iterate quickly. Strategy is a practice, not a one-time event. A small budget template helps now. Copy this simple example into a spreadsheet. Revenue goal, $240,000 annually total. Q1, $50,000. Q2, $60,000. Q3, $65,000. Q4, $65,000. Fixed costs, $3,000 per month baseline. Growth budget, $20,000 annually for marketing. Contingency, 5% of revenue. Reinvest 20% of profit into development. Use the 3-scenario forecast each month. Conservative, 0% monthly growth. Realistic, 2% monthly growth. Stretch, 5% monthly growth. Track monthly revenue. Track monthly costs. Track monthly net profit. Compare each scenario to actuals monthly. Adjust spend and hiring based on what you track. This keeps your plan grounded and flexible. Now take focused action in 5 steps. Step 1. Spend 60 minutes reviewing 2025. Step 2. Write 1 sentence for 2026 vision. Step 3. Set a revenue goal and quarterly split. Step 4. Choose your top 3 growth levers. Step 5. Schedule your first monthly CEO day now. Do these 5 steps in the next 72 hours. Share your 1-sentence vision with someone. Public clarity drives commitment and follow-through. Reflection prompt for your session now. What single change would most improve margin? Write 1 short plan to test that change. Set a 30-day experiment and measure outcomes. Keep experiments quick and low cost. If it works, scale it slowly and deliberately. If it fails, note lessons and move on. Always focus on learning and adaptation. Final thought to keep you focused. Strategy is clarity in motion, not perfection. Small, consistent steps beat large, sporadic ones. Use the templates and prompts in this essay